Two semiconductor stocks are reporting earnings next week, and the options market is pricing in moves that are dramatically larger than what these stocks actually do on earnings day. I'm going to show you the setup, the numbers, and how to trade it. First up, ASML. This is the company that makes the machines that make the chips. They're up 52% this year, trading around 1769. They report earnings on the 16th of July before the market opens, and the options market is pricing in something wild. Look at this chart. The market expects ASML to move 11.46% on earnings. But historically, this stock moves about 2.3%. Last quarter, it moved 2.18%. The quarter before, 2.4%. That means options are pricing in a move that is 425% larger than what actually happens. That gap is your edge. The play is an iron condor. You sell the expected range and collect premium, betting the stock stays within its historical range, which it almost always does. The implied volatility is 77%. The only reason this is on the watch list and not the main list is capital intensity. You're looking at around $8,500 in margin per contract. Now, if you want a more accessible version of this same thesis, same sector, same earnings week, let me show you TSM, Taiwan Semiconductor, the world's largest chip foundry. Up 36% this year at 434. They report the same day as ASML, the 16th of July, before the open, and the options market is making the same mistake. The market expects a 9.6% move. The historical average is 3.98%. That is 141% overpriced. Not as extreme as ASML, but still a massive gap between what the options are pricing and what the stock actually does on earnings day. The TSM Iron Condor pays $7.15 per second herring credit with a max risk of $12.85. Your entry deadline is the 15th of July end of day, the day before earnings. This is more accessible than ASML and has a clear, quantifiable edge. Two semiconductor earnings plays, same day, same thesis. The options market is overpricing the move. ASML is the extreme case. TSM is the accessible one. Remember, iron condors aren't risk-free. If these stocks gap 10% on some AI bombshell, you're taking the loss. Size accordingly. See you next week.